Hello everyone, my name is Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 18th, 2023, and I'm going to tell you why we should be expecting another strong week from crypto and Bitcoin. All right, and it doesn't necessarily have everything to do with just the Bitcoin and crypto charts. We're going to zero in on the US dollar, okay? The US dollar is telling us so much right now, and that's what I really want to focus on today. But obviously, we're also going to look at Bitcoin. We're also going to look at a few select altcoins, Cardano, Ethereum. So guys, if that interests you, then watch until the very end. Hope everyone's having a great day. All right, let's get started with the DXY as promised. All right, this is the chart that everybody should be watching, whether they're in crypto, whether they're in only traditional markets, whether they have a 401k. This chart analysis, rudimentary chart analysis, should be taught in schools because everybody more or less deals with money. Everybody more or less deals with investments. So one should know what really affects your the cost basis, what affects the value of your investments. And 60% of the entire world's trade is done using this currency. So if you were only to read one chart and one chart only for every last investment on the planet, it would be this chart of the US dollar currency index, okay? Generally speaking, let's get rid of our momentum indicator. If the US dollar is appreciating in value, if it's going up, then risk on assets, things that the US dollar is used to buy, those things reduce in value, relatively speaking, and vice versa. US dollar currency index coming down, all of these other things that you're using to buy, that you're using the dollar to buy, are going to go up in value. Does that make sense? I mean, I think it makes sense. I think it's simple. Everybody's talking about the Fed making an announcement on Wednesday, and that is going to be something that spurns the continued growth for crypto. But honestly, it's not that complicated. People love to make it so complex. Look at the dollar, and if you looked at the dollar for the past 10 to 12 years versus Bitcoin for the past 10 to 12 years, you'll see the almost perfect inverse relationship. I'm not going to show it now. I've shown it so many times on this channel. That is something you can take to the bank, pun intended. And so even on the small time frames, you see that. Look, on the small time frames, what do you see on the dollar currency index? On the hourly time frame, you just see this has been going up and up and up. But we have to put it in context, right? It's not, we're not trying to overreact here. If you look at the dollar, what it's been doing, it's been coming down on the much larger time frame, okay? But even though it has been coming down on the much larger time frame, ever since it's been in this channel, it's been going up and down and up and down, and this has caused a lot of uncertainty in risk on assets, in Bitcoin, in most cryptocurrencies. And so crypto has been largely down and sideways for the duration, okay? However, I want to pay attention to what's going on right here, okay? Let's zoom in on the 4-hourly time frame and see what's happening right there. What do you see there? This is a quintessential chart pattern. It is a rising wedge, okay? Rising wedges can break up. Everything can break up and down. We're talking about probabilities. Probabilistically, these things break down, okay? And what we have is, since the last day of August, second to last day of August, August 30th, we've been in this rising wedge formation where it's very clear you've ping-ponged between both ends of this rising wedge, and we may have finally reached exhaustion right here, okay? Now let's zoom in even more on the hourly time frame. Guys, if you're getting value, like, share, and subscribe. Who else is talking about this? If somebody else is talking about this to this level of detail, definitely post their name, post their video. I want to see it. I love learning. But I don't see many people talking about this. And so yeah, this is why I'm sharing it. So you see this right here? That is a resistance, very clear resistance. So henceforth, or heretofore, before this, right? You'd been going up and up and up unimpeded, and all of a sudden, once you hit this 105.4, 105.39, for some reason, there's some strong resistance here, okay? And it makes a tabletop formation in the chart. Now, let's look left for a second, meaning let's zoom out, see if there's anything in the price history that could have caused that, okay? Let's see. So from this level here, and let's make this solid now. Let's make this solid. Okay, and let's make this, yeah, that's fine. Okay, this is what we're butting our heads up against. Okay, and this is the answer right here. Do you see the bottom of this? Head and shoulders, bearish reversal pattern. So let's just extend this right here. This is what's causing our resistance in the US dollar currency index, okay? This resistance is a massive resistance, okay? When I say massive, I mean massive, and that is not hyperbole. We're talking about a 460-day resistance, okay? This magenta level that the DXY is up against is 460 days, hence the tabletop. We investigated, we posed the question, why is there such resistance here when we're forming this rising wedge? Well, it's because this is 460 days of resistance. What do you think is going to happen? So we have confluence here. Two things are happening. Okay, I haven't talked about, I know this is a daily Bitcoin update. We talk about Bitcoin and we talk about crypto, but I really, really have to emphasize that everything that I'm talking about right now is what will enable you to understand why and how things are happening in crypto. Okay, you can look at announcements, you can look at all of that stuff, that's great. But if the DXY is going up, it doesn't matter what's happening, you're likely going to go down in crypto risk on assets. If the DXY is going down, it doesn't matter when the next announcement is, what they're saying, what the rates are, crypto is going to pump. This is what 12 years of data has shown us. If you don't believe me, pull it up yourselves. Okay, we've got this tabletop up against 460 days of resistance. That's our number one resistance. Number two, we have a bearish pattern. It's a bearish pattern because more often than not, it breaks down and not up. That's two things. That's confluence. More likely than not, what happens here is we dump. Now, let's turn on our momentum indicator. I shut it off in the beginning. Let's turn it on. What do we see on the 4-hourly time frame? We're crossed bearish and we're going down. What do we see on the daily time frame? We're crossed bearish with confirmed bearish divergence. Is it confirmed yet? Maybe it's not yet confirmed. It's soon to be confirmed. Bearish divergence, strong bearish divergence. What does that mean, Dean? Well, here you have a high and a higher high on the chart, right? Here on the momentum indicator, your stochastic RSI momentum indicator, what do you see? You see a high and a lower high. That is confirmed bearish divergence once these K and D lines cross, and that is more likely than not going to precipitate or initiate or indicate rather a move to the downside in this asset, in this dollar currency index, okay? So what is going to happen? More likely than not, again, we don't know, we don't have a crystal ball, it's just technical analysis using probabilities. And the probabilities that this is a rising wedge, the probabilities that you're up against a 460-day resistance, and given what our momentum indicators are showing, you will break this to the downside. Okay, you're going to start breaking this rising wedge in the immediate short term, right? It's going to happen sometime this week, if it's going to happen, because it's unlikely that we pop up and make a higher high given this 460-day resistance, yeah? So here we're checking back, we're retracing, but then we're eventually going to break. Where's the first level of support? Right here, you see it. That's why I've got an alarm here. Do you see that? This is support, this is support. Likely when you break this, you're likely going to find some temporary level of support here, what you're likely going to do is what we always do when we break important levels of resistance, important levels of support, okay? Is this an important level of support? Yes, it does count as important level of support. Why? Because up until now, we're in a 19-day rising wedge, okay? It's 19 days that this US dollar currency index has been rising in this wedge. So when it breaks down, don't think it's just going to go in a straight line. No, what's going to happen, more likely than not, is going to break down, hit the first significant support level, retrace, retesting previous resistance as, retesting previous support as new resistance, and then it's going to come back down. Okay, so this is what I'm seeing on the US dollar currency index, and I'm seeing this happen this week. This is one of the main reasons I'm thinking that Bitcoin and crypto are going to have a really solid week and follow up last week's strong week with an even stronger week this week, okay? This is exactly what I'm looking for. You know what? Let's put this in, okay? And let's revisit this. If I'm wrong, I'm wrong. If I'm right, I'm right. But let's put it in and we'll see if this analysis holds, okay? Let's put in some lines. Where's the line? You know, guys, I'm not the best at finding these. Okay, path. That's what I want, okay? So I'm thinking something like this, and then finding support here, something like that, retesting previous support as new resistance, and then boom. Okay, something like that. Okay, let's see what happens during the rest of this week, but I think I would not be surprised if something like this happened. Okay, so let's keep an eye on that. Okay, that's enough about the US dollar currency index, but I hope you understand just how important it is in our overall analysis of these crypto markets. Now, let's look at Bitcoin. Bitcoin put in a really nice green candle. It's not really nice. Let's give credit where credit's due. It's really nice. Why is it really nice? Not because it's really long. It's really nice because it's a hammer candle, okay? It's a hammer candle on major support. This major support is this 25K support level, okay? And again, it's a 460-day support. 460. Where do you remember that, right? I just talked to you about a 460-day level of resistance that the US dollar currency index was hitting. And I just told you that the US dollar currency index is inversely proportional to Bitcoin and risk on assets. So you should not be surprised that Bitcoin is now bouncing off, or just bounced off, a 460-day support level, right? These things are inversely correlated. Not perfectly, but sometimes they're almost perfectly inversely correlated. You see that? 460 days, right? This previous resistance flipped into new support. This is what Bitcoin just did last week with this nice green hammer candle, and now we continue the move, okay? So this week is all about continuing last week's move up and out of that support level of 25K. Let's jump down into the daily time frame, and what do we see here? Well, we see that we're breaking this resistance of this channel, okay? We're coming up and out. I showed the Wyckoff accumulation range, and this is being a sign of strength, okay? If you don't know what I'm talking about, you can check yesterday, or yeah, I think it was yesterday or 2 days ago's video. Talked about Wyckoff accumulation schematic and this being a sign of strength, and this is the continuation, okay? So we're seeing some continuation in the move, and our next significant resistance, one could say, is more likely than not at 32K, okay? It's not this, although you do see some resistance here. I wouldn't say that this is significant resistance. I'd say this is more significant resistance. How this move is going to play out, I don't know. But I do feel like once we break this channel, we just, don't get in the way. Don't underestimate the potency of this move, because all of this right here, this accumulation, this is the cause. Whatever we're experiencing now and what we will experience to the upside, that's the effect. So if we were to see that we accumulated just in this, okay, on the small time frame for 30 days, right, sideways, expect, right, that not that we not pump for 30 days, but we basically accumulated orders, accumulated liquidity for 30 days, and that's going to translate into that upwards momentum. Not exactly sure how long. Wider the base, higher in space, you know what they say. But also, it's not just that little piece right there. It's also all the accumulation in this three-wave move right here. Okay, so keep that in mind when you try to fade this move. I saw some people on Twitter talking about good places to go short. You can do it if you're an expert, if you're really good at it, if you enjoy it, but there's no reason to make life difficult, right? Life's difficult, hard enough when we're going sideways. Life's hard enough when there's no discernible uh, direction, right? It's easier when there's, we're either going up or down, but when we're going sideways, everybody's getting chopped to hell. But when the market chooses a direction, just get on and get out of the way. That's not financial advice. So that's Bitcoin. Like I said yesterday, I mean, I don't know what's going to happen, but I would say this. Most bullish scenario is this. Most bullish scenario for Bitcoin this week is something like this. Okay, and this is like really bullish. We go all the way to $49,000 and come back during the following week, right? So we pull this, come back during the following week, and rest on 32,000, which was previous resistance, right? You can see it here, previous resistance, flip it into support. That would be the most bullish scenario. The less bullish scenario, but still bullish scenario, is that we stay under 32,000 and we do this and we treat this resistance as new support like that. So, we go only to 32K, find resistance at 32K, and then come back down to about 29K and make that new support and then keep going. Okay, so that's basically what I'm seeing with Bitcoin. All right, now we talked about Bitcoin, we talked about the US dollar currency index. What I want to talk about for the remainder of the time are two altcoins in particular. I want to talk about Cardano and I want to talk about Ethereum. Okay, so let's start off with Cardano. All right, guys, if you're getting value, please like, share, and subscribe. Cardano, like many other altcoins, are really poised to run. Okay, look at this chart. Look at this chart. I'm gonna even go on the weekly time frame. The bullishness here and the potential here cannot be denied. I mean, it is very, very clear. Looking at your momentum indicators, you're completely bottomed out. You're crossed bullish for the first time in a very long time, and you've been playing in this accumulation range ever since May of 2022. Okay, playing in this accumulation range, and you've been basing at around 25 cents for Cardano for about a year. Almost a year you've been going up and down and treating 25 cents as support. Right now we're on support, on that 25-cent support. So, when you're investing, you want to buy low, sell high. You want to buy support and sell resistance. This is the definition of buying support on Cardano. Next major resistance, I would say, is like I designated. Okay, I'm seeing this. It may or may not be. Okay, let me see something. Okay, yeah. What I would do to set my next target to the upside is I would take a Fibonacci retracement tool like so, go from top to bottom, and then I would target the phi ratio. So I would say $1.17 would be my next target before I would expect major resistance. Do you see how that works? Phi ratio, the 618 Fibonacci retracement level, is support when you're above it, resistance when you're below it. Right now we're below it. So if you see that when we come back here, we're going to experience the resistance created by this and by that, and you shouldn't be surprised that the math works out. I don't know how it works, but it always does. It usually does. This level of $1.17 is going to be resistance. And when Cardano gets here, I can expect a move back to retest previous resistances, new support before continuation to the upside. Okay, so that's Cardano. That target, $1.17, is approximately 366% to the upside from where we're at. Okay, so that's Cardano. Ethereum, last but not least. Okay, big market altcoins right here. Ethereum. Again, this is really bullish. Why? Because you have this 1, 2, 3 wave move, okay? That designates, typically, 3-wave move designates completion of a corrective pattern, okay? And all of this can be seen to be a sort of accumulation channel, okay? So after a declension or after a big rally, what you have is either accumulation or distribution. You have these channels, right? Wyckoff talks about these. So you're going to go up and down and up and down and up and down and just recalibrate, gather orders for the next move up. You can't just go from down to up and up to down. So you go down, you accumulate once again, and this accumulation has taken quite some time, right? This accumulation has been going on since June of last year, okay? So we're talking about, again, 460 days of sideways price action. Ring any bells? You go up and down and up and down and up and down, and you're at the bottom of the channel. Again, you want to buy support, you want to sell resistance. So this, to me, seems like a great place for a move to the upside, to the top of the channel, breaking the top of the channel, and then continuing to the upside. That's what I'm looking at Ethereum. And if I were to designate the next significant resistance, I've put it up here with this yellow line. I'd say about 2,500. Why? Same as my previous analysis. I'm taking my Fibonacci retracement level from the top to the bottom of the previous impulse, or yeah, you could call it an impulse. You can call it a zigzag impulse, right? And because we're beneath the phi ratio, you can see 25K presented support here, then it was lost. So it was support on the from up to down. It's going to be resistance from down to up. I think 25K is the next significant resistance for Ethereum. Guys, that's all I've got. Hope this was helpful. Hope this was useful. Like, share, and subscribe. If you have, I would appreciate it. Take care. Hope you're well positioned to take advantage of these moves that are coming. And I'll see you next time.